Hey, I'm J.D.Frost, and welcome to the Accountability Show. Thank you so much for tuning in, and please like and share and comment below. I would love for you to turn on your notifications too, so that you know when all these episodes drop. The Accountability Show is about building the firm foundation of your business. The foundation of your business really consists of knowing the numbers. When you know the numbers, you can predict the future. When you know the numbers, you can understand patterns. You can understand trends in your business. And so over the last few episodes, we have been talking about the financial statements. And while the balance sheet and the income statement are very important, the financial statements also include what's called a cash flow statement. And that's what I want to talk about today. So the cash flow statement is really the statement that every small business owner should be running their business with. The cash flow statement is going to tell you exactly where your cash is going. Now, most small business owners that I've seen, this might be you, this might not be you, but they run their business by looking at their bank account. I know I did that for a long time. I just looked to see, and I'm a CPA, I look to see how much money is in my bank account. Okay, great, I'm good. But I didn't know where the money was going, why it was going the way it was going, why was money coming in, what was my money going out for. And so a cash flow statement helps you understand that. So in the Accountability Show, every time we're talking about a new topic, we're discussing the what, we're discussing the why, we're discussing the how, and then we're discussing a real life example. So what is a cash flow statement? A cash flow statement is exactly what it says. It is a statement that determines where your cash flows. Does your cash flow in or does your cash flow out? And what activities does your cash flow in from and out from? Now, there's two different types of cash flow statements. There's a direct cash flow statement and there's an indirect cash flow statement. Now, this takes me back all the way to school. And while I'm even sitting here talking to you about this, it reminds me of how much I had a difficult time in school. Like in a class about cash flow, and I'm sitting here talking to you about cash flow is just completely mind-blowing to me. But from my 15 years of experience in public accounting, the cash flow statement is the most important. So it's very important for you to know this. So there's two different methods, the direct method and the indirect method. Now, the most popular method, and if you search any publicly traded company, that's on the New York Stock Exchange, if you look at any cash flow statements that are generated by an accounting firm that are GAAP basis, generally accepted accounting principles for small business owners, they are going to use the indirect method, and that's what I'm going to focus on. The indirect method means that you start with your net income or your net loss, okay? You start with your net income or your net loss. Now, there's three different types of cash flow activities. There is operating activities, there are investing activities, and there are financing activities that involve cash flow. In the cash flow statement, those three different types of activities involve different types of transactions. So I don't want to go too far into the details here, but that's kind of the whole purpose of the show, is to tell you more. Hopefully you've seen one of my videos on Instagram. Give me a follow at jdfrost.today. Hopefully you've seen one of my videos on Facebook and it kind of created a little bit more interest. And now you're sitting here watching this episode of the Accountability Show about cash flow, so I have to go into the details for you. So the indirect method starts with net income. Then you have your operating activities. What is an operating activity? Different types of operating activities are depreciation, accounts receivable, accounts payable, accruals, accrued liabilities, payroll liabilities. They could be changes in employee advances. And when I say changes, the key to remember in a cash flow statement is once you understand a balance sheet, your cash flow is the change in the balance sheet activity from one period to the next. Now, if you go back and watch the other episode, I can't remember what number it is for balance sheets. A balance sheet is a picture in time of your company. So the difference between a picture in time as of the end of December 31st, 2019, and today, June 17th is when I'm shooting this, June 17th, 2020, those are two separate pictures in time. Well, the change in those balances during that time is going to help determine your cash flow. And it's only the change in the balance sheet because you already determined the change in your income statement because we're starting with net income. So that's why we had to talk about the balance sheet and the income statement before the cash flow statement, because you have to have the balance sheet and the income statement prepared before you prepare a cash flow statement. So we're talking about what is a cash flow statement. A cash flow statement, there are two different methods, direct method and indirect method. The indirect method starts with your net income. Then you drop down to your operating activities. So if you have an accounts receivable that was $100,000 last year and an accounts receivable that is $200,000 this year, or between those two periods, then you have an increase in your accounts receivable. Well, if you think about it, when you have an increase in your accounts receivable, that means you have a decrease in cash because you did not collect cash. You only increased your accounts receivable. So in operating activities, when you're dealing with an asset, you have an indirect relationship between cash and the balance of that account. So that's operating activities. Now payables works a little bit differently. Let's say that you had $100,000 of payables in the beginning of the year, and you had $200,000 of payables at the end of the year. That's a $100,000 increase in payables. Well, when you had an increase in payables, that means you did not use cash to pay the accounts payable, those bills. That means you increased your cash flow. So what's really interesting about a cash flow statement, if you can hang in there with me, what's very interesting about a cash flow statement is if you understand how a cash flow statement works, then you will understand how to generate cash in your business. In order to generate cash in your business, you need to increase your payables. Don't pay anybody. Literally, don't pay anybody. Don't pay your payroll. Don't pay your payables. Now, eventually, people are going to get pissed off that you're not paying them. But that's a way for you to generate cash in your business. Another way for you to generate cash in your business is just the opposite of what I said about the receivables. If your receivables go from $100,000 down to $50,000 and you collected receivables, you decreased your receivables. That means you increased cash. So in order to generate cash flow in your business, you need to decrease your receivables. You need to collect. So you want to collect as much cash as you possibly can and don't pay out as much cash as you possibly can to generate cash in your business. And it's amazing when you start watching this, and I'm telling you from direct experience, when you start watching this, you start to create cash. You start to create cash flow. Operating activities is the first activity. The second activity in the cash flow statement is investing activities. Investing activities are pretty simple. It's only purchases of equipment, purchases of furniture, purchases of buildings, purchases of assets. That's the majority of investing activities. Purchases of land, investing activities. Part of investing activities also is accumulated depreciation. It is if you sold or you purchased a piece of property. So when you sold that property, you have to show that in the investing activities section. But if you purchase land or you purchase furniture, that is a decrease in cash. But if you finance that purchase of that furniture or that land, we drop down to our next section on the cash flow statement is financing activities. If you finance that piece of furniture, then that would increase your cash because you didn't use cash to buy an asset. You financed it. Very, very important. And why do they have all these three different categories? I don't really freaking know. I don't know. That's just the rules. I don't know why they decided to make it that way. They just decided to organize it that way, and that's what GAAP accounting is, generally accepted accounting principles. This is what you learn when you're studying for the CPA exam if you're ever interested. This is the shit that you have to learn. You plug into your brain for 80 hours, you study all this crap, and then you put it into a test, and then they tell you you're a CPA. That's pretty much the way it works. But as you really, truly understand how this works in your business and you start to understand how cash flows in your business through this statement, it starts to open up this whole nother world of how your business works. And if you understand these three different activities, operating, investing, financing, those activities are what allow you to control cash in your business. So then all of a sudden on a daily basis, you're starting to understand that the decisions that you make around paying for things or investing in assets or financing assets rather than paying for them all up front. Like I have a lot of business owners that they're like, I don't like debt. I don't want debt. I'm not going to use it. I am debt free. Awesome. But you also have no cash because you pay for everything up front. There's no point in doing that if it's going to be an asset that generates more money than what the financing costs you. So every decision you're making really revolves around cash flow in your business. And it's amazing how quickly you can generate cash. I had 2 decisions that I made yesterday based off of my budget that saved me $8,000 in cash. $8,000 saved me in 30 days. I'm able to use $8,000 more now than I did before because I made a decision about cash flow. And my budget and my understanding of cash flow allowed me to save that money. $8,000, 2 decisions. Those decisions took me about 5 minutes to make. Maybe not even that long. But that's the power in cash flow in your business. That's the power of understanding this cash flow statement. And if you're not running your business off of a cash flow statement, you're missing out. I'm telling you, I could show you where there is an additional $5,000 to $10,000 every single month in your business that you don't even know about right now. And you might be able to find out about it if you decide to do the work and understand this stuff. But I'm telling you, the more that you're able to understand balance sheets, income statements, cash flow statements, and understand how cash really works in your business, you can run your business and have way more control than you ever have before, and you start making better decisions, which allows you to sleep better at night. And after all, we're all starting these businesses for certain goals. I don't know what your goals are. You don't know what my goals are. But if I understand cash, and if I understand the fact that I started my business to make a profit and generate cash, then I better understand what causes cash to go up and down in my business. And if I understand that, then I will reach my goals. I hope you learned something today on this accountability show. It also turns into a podcast. Check that out, by the way. Go subscribe to my podcast on iTunes, the Daily Ledger, and Spotify, the Daily Ledger podcast. You'll be able to listen to this there. And if you are listening right now, I hope that you go to YouTube and go like, share, comment on this episode, because I just gave you a lot of great information right now. Go check out your business, analyze your cash, apply these things. I'm telling you, you will find money in your business that you haven't found before, and it will help you reach your goals. Thanks for tuning into the Accountability Show.